Hey, Blue Collar Stacks here, guys. I wanted to just make a quick video about the volatility in the market today and how to keep your confidence up on what we're doing here, what our goals are. Okay, and it's real simple. These are numbers that you can do for yourself, and this is just basic research numbers that I've done. I started, kind of doing this quite a while ago, but let's just go back to the year 2000. I'm 50 years old, so that's 26 years ago. But in 2000, if you had bought $100,000 house in 2000, all right, you would have, with interest and everything all in, spent $264,000 on that house, and you'd still have 3 years to pay on it. All right, that house would now be worth roughly $200,000. Okay, that's at a 2.5% increase in value over the past 26 years. All right, do the math, but you'd still be underwater on that property. You wouldn't be able to sell it for what you had into it. And again, you'd still be paying it off. If you had put $100,000 into a savings account in the year 2000 right now and not touched it, just a basic savings account, you'd have roughly between $140,000 and $150,000 in that same savings account. So you would have made $50,000 in interest over the past 26 years. That's on the high end. Could be as low as 36,000. Now, if you had put your money into like other, savings, high interest stuff like, government bonds or high interest CDs, you'd probably be somewhere around 285,000 to 300,000 on good investments. Money markets maybe a little bit more, maybe closer to 350 was what you'd have right now if you didn't touch it. Now let's talk about precious metals. If you had put $100,000 in the year 2000 on the average silver price in the year 2000, right now your silver, even with the downturn, I'm talking about at the time of recording this, we're about $73 an ounce. All right, but let's come back because you got to sell it, and if you needed to sell it real quick, let's call it today. You sold it today, and you took a $3 to $4 spot drop on it. So let's call it $70. At $70 an ounce, you sold it to like Comex or Kitco or something like that, which they'd give you. They'd do it. They'd be writing you a check for anywhere between $1.2 and $1.3 million off of a $100,000 investment over the period of 26 years. Now let's say you put that same $100,000 into gold in the year 2000. Right now you can, and gold's a lot easier to sell. Like, usually you get really, really close to spot. Like a lot of people right now are paying 98%. When it's a little more stable, they're paying, 98.5. So you're really close to spot. But in today's market right now we're sitting at around, give or take, $4,900 per ounce. That $100,000 that you would have put into buying precious metals would now be worth $1.7 million. Think about that. Silver and gold has outperformed every other investment you can possibly think of, other than like if you got in early on Apple or Microsoft or Tesla, stuff like that. But that's gambling. You don't know when these things are cheap. You don't know when if Tesla's going to take off. You didn't know Apple was going to be worth what it is. You didn't know Google was going to be freaking, the biggest company in the world. You had no clue. But what you do know is that silver and gold have been money, real money, for thousands of years. And they will be that for the next couple of thousand years until everything's free and we all live in a utopia, and you just wish for things and they happen. But we'll all be gone by then. So it has outperformed everything over the past 50 years. It's a solid investment. It's a hedge against inflation. It's worth more now than it was 26 years ago. How many of you right now, if you had put $100,000 into silver or gold, sitting on that $1.3 to $1.7 million, is that enough to retire on? I don't know. For some people, yes. Some people, no. But that's $100,000. That's, you putting that money in. And again, start right now. Put 20% of whatever you make into precious metals. This is the dip right now. It may go down to 50. It may go up to 120 in a week. It's done that. It's done it. But the fact is that you get in. You don't risk what you can't afford to lose right now. Obviously, if you're looking at doing this for 6 months, you're doing the wrong thing. This is a long-term thing. 10 to 20% of whatever you make a month, go down, buy silver. Buy your silver. Start with that. It's cheaper. You can get more of it. And it doesn't matter what kind. If you got it, the best investment right now is junk silver. Buy some, constitutional. Buy the quarters, dimes, nickels, half dollars, 90% stuff, 40% stuff. It has silver in it. You don't have to melt it down. Keep it. And as it gets melted down, it'll be worth more than its silver content in the future. But start with that. Start with the constitutional silver, junk silver. Then get a couple ounces here and there. As much as you can possibly put in there and not hurt yourself in the time being. Just get what you can. And then once you get to 500 ounces of silver, all right, continue to buy it. Wait for your favorable exchange rate. Silver to gold goes anywhere. I mean, the lowest it was, and I traded for a couple ounces, I got lucky, but I traded for a couple ounces when the ratio was about 48. This was right at the end of January this year. I was like, hey, this is a really good exchange rate, so I got a couple ounces of gold for it. And then I did it again when it was at 63, but it was a favorable trade. I bought gold, and then I traded some, and I want to say I was like at 61 or 62 ounces of silver for an ounce of gold, and it was for these kangaroos. They're beautiful coins. But I bought one, and then traded the silver for the other, and I got a really good rate, and it's right about where it is right now. I mean, I didn't lose, I didn't really gain. I want to say I spent $49.40, I think, for the cash one. No, it was actually a little less than that. It was $48.60. $48.60 is what I paid cash for the one, and then I traded 62 ounces of silver. Now, normally I want to stay like at 55 exchange rate on the silver for gold, but you know what? I mean, it's right now it's sitting at like 68 or 69 is the exchange rate. So I still made out. I got the gold, the silver, but it's going to go back and forth. In a week or two, it could be 55 again. I want to try and stay. That's like my recommendation. If you see the exchange rate at 55, and you can find somebody to trade you some gold, if you go into a shop, they might want if it's a 55, they might want 58 or 59. They want a couple of extra ounces of silver for that gold, because they gotta make a couple bucks, right? But you can peer to peer. Some people just want to put some silver in, and they got a bunch of gold. They want to get the silver. Maybe you have some maples or something like that they really like, and they just really want to pick up some of that stuff. But make the trade. Get your silver. Start out with the silver, 90%. Then go to 999. Get about 500 ounces under your belt. Make a trade for 2 ounces of gold. You'll still be left with slightly less, probably about 375 in silver to 2 ounces of gold. And now you have a couple ounces of gold. Don't forget about the fractional gold. There's higher premiums on that, but if somebody wants to make a trade and it's favorable, and you can get it for close to spot on the fractional, get your fractional. Get the tenths, get the quarters, get the halves, stuff like that. Put whatever you can. If you want to buy cash, the fractionals, put that stuff away. It still adds up over time. And if you can put a year, like at today's prices, with silver, there's no reason that anybody can't put 40-50 ounces in their stockpile in a year. Of that's real easy to do if you're serious about your future and what you're going to put away. Get 40-50 ounces a year. If you can do more, if you make more, like I said, 20% is my magic number. If you can put 20% away and you're making $100,000 a year, obviously you got to pay taxes and stuff like that, but let's say you take home 60, 20% of 60. I went to public school, so my math isn't crazy, but that's what, $3,000? No. That's $12,000, isn't it? $12,000. I was going to divide, whatever. But $12,000. Okay, maybe not 12,000, but if you can put a good 10%, $6,000 out of 60 into it, okay. Well, if you go exponentially the way we've gone, the past 26 years, and silver keeps up, gold keeps up, stuff like that, you can put $6,000 a year into that. You're talking about, for silver, it would be 13 times. So gold would be 17 times. So that's, in year over year, you start right now, that $6,000 should be worth 60. That'd be 22. Be close to $80,000 for a $6,000 investment. And you do that year over year over year. You keep doing it. And then you trade for the gold, and then you get a little bit. You're at like 16 to 17 times. Even if you take out what happened this year and last year, silver was between 30 and 40. Okay, still, let's call it 40. Let's say the right price for silver right now is 40, and you'd collected in 2000. Okay, well, that still puts you at around 10 times your investment. So that $100,000 would be worth right about 900 to a million, 900,000 to a million. That's still twice what you would have had if you had been in high interest yields or great investments, just above and beyond everything else. Even take out this year as an anomaly, you'd still be at, again, for gold, probably 1.2 to 1.3. Silver, you'd be at, again, $800 to $1 million on a $100,000 investment. What are you doing? What should you be doing for you, for your family, for your future, your kids, your grandkids? And it's something we should be teaching our kids right away. Every birthday for your kid, get them an ounce of silver. Get them something that they can get started. Start them young, so when they get their first job, they aren't spending it on PlayStations and going out and getting stupid crap. They're getting something that can be tangible, something they can hold on to, something that's worth something in their future. We always want to talk about teaching our kids, the right moral things to do, but it's also our responsibility to teach our kids to be financially responsible. Do you want your kid living in your basement when he's 35 years old? No, you want him to be successful. You want them to have a family of their own. You want them to, be financially secure. And teach that same thing to their kids. It starts with you. It starts with you showing them, by leading by an example, and it's not too late. It's not, I don't care how old you are. It's not too late to start. It's not too late to, put something away with the money you're not using. You can either leave, if you're older and you've had all these savings in your account just sitting there, making 0.5%, 1% over a year, and you're 60 years old and you're relatively healthy, maybe you'll make it to 85, 90 or something like that. Okay. You get that 1% in your account. Even a 401k. How much is your 401k making? How much is it making? And that being said, silver and gold, that can be your 401k. Instead of having it invested in mutual funds and stuff like that, there's all these companies, the Hartford, there's, Kitco, there's all this stuff. You set it up, buy your gold through them and keep it in their vault. And have it sit in a 401k if you're really worried about it. And then it's tax deferred. And then you can have it pay you. You can either, in 20 years, you can take that money out of it either with, a regular 401k, put it back in, or you can get the actual physical metals shipped to you. It's the best of both worlds. And why do they do that? Why is you can have your 401k in precious metals? Because the government and the banks know that that's the most reliable thing. That's the thing that isn't going anywhere. That's why banks have investments in silver and gold and platinum and all these precious metals. These are the people, their whole job is money and making it. And when they stay in precious metals, they stay solvent. It's when they get into, the properties and they get into, bonds and all these other things that the banks get in trouble and they go insolvent. It's not when they buy physical metals, which is what they're doing right now. Why do you think they're driving the price down right now? So they can pick them up, because they're all in trouble. They're all these banks, these banks that are failing, isn't because they bought physical metals and they're backed by that. It's because they invested in all other kinds of stuff. Do your research. I mean, look at this stuff. This is, when they invest into the metals, one of the biggest holders of metals is J.P. Morgan. They hold more than most governments, physical silver and gold. And they've been around forever. And, my opinion, don't sue me, J.P. Morgan, but, the biggest manipulator in these metals. Why do they do that? So they can drive it down and buy more, cheaper, more physical metals. My opinion, this is a rumor, don't sue me. This is kind of like a thing, I don't, but they did have to pay close to $1 billion for market manipulation, a year and a half ago, 2 years ago, or something like that. My opinion only, but you Google it. But anyways, precious metals, man, get in and buy an ounce today. From either peer-to-peer, go to your local coin shop, and, this is a theory I have. If 5% of the United States went in about 1 ounce, the price, what do you think that would do to the price? 5%? How many people? 350 million people. Well, half of those are adults, or maybe more. So, call it 150 million ounces of silver. If in one day people went in and bought 1 ounce of silver, 150 million ounces, that's more than that's sitting at the COMEX right now. It would. I don't know exactly what happened, but I guarantee the price of silver would shoot way the hell up. So. But do it, man. What are you waiting for? I don't want to be 70 years old and working at, digging ditches and stuff and all that stuff. I want to spend time with my grandkids. I want to be, when my grandkid wants that thing that they have to have, whatever, I want to make sure that thing's under the Christmas tree or as a birthday present and not have to worry about it. What do you want to do? Anyways, if you liked what I had to say, if you didn't like what I have to say, comment. If you want to hear more, subscribe. I'm going to be doing some interviews over at the local coin shop, talking about a bunch of other little things on how to stack properly, what to get into. There's other videos that shows that if you don't have any money, nothing sitting around, but you've got that thing that you could sell on eBay or whatever, go to a pawn shop. I'm not going to get into all that. There's another video that shows how to get free silver and gold. Go to my channel, check that out. Some good information on that. So get started, get stacking, like, share, subscribe. Tell me I'm an idiot. I don't care what you say in the comments. Say something. But hey, if you stayed in that long, last thing I'm going to say is I'm going to be giving away some silver. Probably by June, I think. Let me get some more subscribers, get some things going. But I'm going to have some contests. It's not going to make you rich. We're talking, giving away like 5 ounces for 5 people. Nothing crazy, but hey, who wouldn't want today's prices? Who wouldn't want me to send you $70 for doing nothing? So, but yeah, I'd like to get some people started. People that haven't been into this, or people that maybe have like less than 10 ounces, that would like a maple or a Liberty or a bar or something like that, something cool. But anyways, hey, thanks for listening to me rant. Sitting in the truck. I'm going to get back to work because I am blue collar, man. I'm still working in my tow truck. It's snowing here in Flagstaff today. So, probably going to get some calls pretty soon. But hey, thanks, guys, for listening to me. I really appreciate it. And my 11 subscribers. I love you guys, man. Thanks for pressing that button. But if I can get you to do a little bit more and share it and tell your friends about it and get stacking, man. God bless. Blue Collar Stacks out.